Good day, madam. Today I am Naveen Kumar. Matrix number 270912 will present our written assignment. The title is The Monetary Policy and its Impact on Malaysian Economy During 1997 Financial Crisis. In July 1997, Malaysia began to gain greater worldwide attention because of the involvement in a severe regional economic crisis that was sweeping Asia. At its lowest point in January 1998, the ringgit was trading at 4.88 to the US dollar, down to an average of 2.42 in April 1997. Business closures, layoffs, and rising inflation levels were all signs that the financial crisis had a direct impact on the actual economy within months. The Malaysian economy was in recession for the first time since 1985, shrinking by 6.7% in 1998. Almost everywhere, the present economic crisis is worse than the one the United States suffered in 1985. Exchange rate began to depreciate with broad variation in March after the brief period of stability in February and March. The collapse of the stock market was far more devastating than the fall in the exchange rate. Kuala Lumpur Stock Exchange Composite Index decreased by 44.9% between July and December 1997. At the government declaration that it was lowering the budget for operational expenditures by 18%, as well as the cancellation and postponed of many major mega projects, a fall in both expenditure and investment was initially predicted in the public sector. Next, exports were projected to be only source of growth in light and downturn in consumption, investment, and government spending. As a result of the decrease in GDP, employment growth slowed, and this is the turn led to increase in the number of people facing unemployment or being laid off. The social impact of the economic crisis has been transferred mostly through the growth in unemployment and inflation, since actually family incomes have decreased within an estimated 2 million migrant workers and steady government expenditures in the social sector, unemployment and income losses were reduced. That's all from me. Thank you.
Greetings to Madam. My name is Kwok Hong Jun and my matric number is 270805. So now I'm going to present about the beginning of the financial crisis 1997. This financial crisis started in Thailand and it spread throughout the whole Southeast Asia, including Malaysia. During this financial crisis, there are some issues that arise in Malaysia, which are the contraction of the economy, the increased unemployment, the instability of the exchange rate, and also the price pressure. Now, let us start with the first issue, which is the contraction of economy. As we all know that during the financial crisis, the growth rate of the GDP of Malaysia has declined. So from the table, we can see that from 1997 to 1998, the growth rate of the GDP of Malaysia has registered a negative growth from the first, second, third, and fourth quarter, which in the first quarter it reduced from 9.2% to negative 2.8%, and for the second quarter it reduced from 8.4% to negative 6.8%, and for the third quarter it reduced from 7.5% to negative 9%, and at last for the fourth quarter it reduced from 6% to negative 8.1%. Next, for the second issue, which is the increased unemployment, because of the contraction of GDP, it has also caused a slower employment rate, and this has shown that the unemployment rate has increased. From the table above, we can see that from the 1997 to 1998, the unemployment rate has experienced an increasing trend from about 2.4 for between 2.4 2.6%, and it increased until somewhere like 3.2% there. Furthermore, the third issue is about the instability of the exchange rate. So, because of this financial crisis, it has caused the Malaysia ringgit, which is the MYR, to depreciate from 250 from RM 250 to a new low of nearly 4 ringgit point 50 cent to US $1, which is shown at the graph besides. And this is majorly due to the speculation attack from the financial market. Lastly, I'm going to present about the price pressure. First, the price pressure, we are going to measure it by using the CPI, which is the Consumer Price Index. And next, there's a main question: why does the price pressure occur? This is because our currency is experiencing depreciation. The depreciation will cause the price of the imported good to increase. And from the chart, we can see that from 1995 until 1998, the CPI is increasing, has shown an increasing trend, which indicates that the general price level is continue to increase. So that's all from me. I'll pass to the next presenter. Thank you so much.
Assalamualaikum warahmatullahi wabarakatuh. Good morning, doctor. My name Fadia Nur Aziza Syafitri. I'm exchange student from Indonesia with nometric 702348. So here I will tell about the transformation during the crisis based our research in this paper. So in 1997 until 1998, the Malaysian economic slump due to the effects of the East Asian financial crisis, which the impact was experienced in 1998. And in Malaysia, the initial policy of the Mahathir Mohamad government to recover from the 1997 monetary crisis was to establish the National Economic Action Council, or uh, NE, NEAC, which is responsible for developing the National Economic Recovery Plan, or PPEN. And with the following objectives: first, there are stabilize the ringgit value. So, with the 1997 monetary crisis, the Malaysia ringgit exchange rate movement was erratic and degenerated. And as a result, the ringgit exchange rate against the US dollar uh, has shown significant change during the crisis period. And the method taken is that the government urges companies, both state-owned and private, to conduct a transaction using Malaysian ringgit. And another way is to encourage people to buy domestic products. Thus, in imports of foreign products will be reduced so that it will reduce dependence on the US dollar. And the next, there are restore market confidence. So, from these policies, steps were taken by making regulation to help trouble industry and companies. And therefore, the government must be consistent in enforcing all the rules that have been set, so that industry and business actors get legal certainty in carrying out economic activities. And the next, there are strengthen market stability. So, because still many are worried about the economic situation in Malaysia, in that situation, in 1997 in Malaysia that has not yet recovered. One of the strategy is to strengthen financial market stability, such as maintaining the integrity of the banking system, providing a capital injection to the banking sector whose market is developing. And this step uh, aims to restore public confidence and ensure that the entrepreneurs will be better prepared to face the challenge of the world and will significant uh, indirectly strengthen financial market stability. And the next, they are strengthen the economic foundation. So the volatility of the ringgit exchange rate makes the decision to invest more difficult as a result of the decline in the level of investment. The government encouraged good investment activity by inviting foreign investors as well as investors to enter the country. And this is will certainly lead to the creation of new job opportunity, which in turn will reduce the unemployment rate. And okay, so in the last there are built weak sectors. So after the monetary policy, I'm sorry, so after the monetary crisis in Malaysia, the main strength, there was an oversupply and a shortage in supply, and as a result, primary and secondary sector production declined while the value add of the service sector increased to markedly lower margin. The increase in all sluggish sector was driven by several government policies such as monetary and fiscal stimulus from the government, a low interest rate system, building more infrastructure facilities such as affordable and medium-sized housing that is affordable by the public and flexibility in borrowing from financial institutions. And the next, okay, this table shows that the large inflow of foreign investment into the production sector for capacity building of export oriented industry, including the oil and gas sector, um, for capacity building, I'm sorry, as well as investment in capital intensive and high tech sectors contribute to the high level of private investment. And promotion of foreign direct investment or FDI was strengthened by the introduction of several additional incentive package in 1996 to attract information and communication technology companies to operate within the multimedia highway corridor. And the Malaysia is also focused on promoting global dialogue to facilitate the convergence of Sharia law and standards. With the increasing liberalization of the Islamic financial system, Malaysia has now emerged as a leading international center of Islamic finance with a rapid growth of 6% to 22% in the banking sector as a whole over the last 40 decades. And the next slide is uh, the Malaysia strategy in dealing with the current global crisis focus on investment, government guaranteed credit and expansion of infrastructure development. So, and Malaysia made two economic stimulus package with the aim that Malaysia is ready and in a good position to take advantage when the world economy begins to recover. And in essence, Malaysia is making a long-term transformation by building a new knowledge first economy. Accordingly, Malaysia will focus on investing in education as well as technology with the aim of strengthening Malaysia's ability to lead in the field of information technology, create renewable energy, and also create new economic sectors. Okay, that's all for me. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.
Good day to total everyone. My name is Nang Chen Wei. My registration number is 2710115. Today I want to present the impact of the financial crisis 1997. The Malaysia economy is seriously impaired by the financial crisis 1997. Most of the Southeast Asian countries they were affected by the crisis. It has slowed down the progress of economic recovery. When the economy is in a crisis, the central bank plays a significant role to recover the economy. The monetary policy is the fundamental to use by central bank to achieve the economic objective. There are some impacts in the financial crisis 1997 on the Malaysian economy. First is the impact on trade. Second is the impact of business confidence level. Third one is the impact on the monetary policy. Now I will explain is how financial crisis they impact on the trade. The export increased and recovered since 1998. The export indicates the positive growth during the crisis. This is because the fixed exchange rate system was implemented by central bank, which the $1 is paid with 3 ringgit 80 cents. So in Malaysia, they benefit from the exports and of goods and services during that time. So the export in 1997 recorded as 220,890 million, while the 1998 recorded as 286,563 million. But for the export growth rate in 1997, this is at 12.11%. So in 1998, it increased to the 29.73%. So it will raise in the external and the domestic demand to boost the growth rate. And second, the impact on business confidence level. The financial crisis brings challenges for the business owner, and some of firms shut down the business in the financial crisis. This is because they don't have sufficient funds to maintain the business. So the business confidence level will be affected. Second, the firms who have the international business, they will expose the risk of the currency fluctuation. The fixed exchange rate system, they can reduce the risk of the fluctuation of the currency. So the firms can benefit from the relatively low price and cost with this policy. So the firms, they're willing to make the investment in the short term. Next. Impact on monetary policy. The central bank will implement expanded monetary policy to recover economy. The Central Bank of Malaysia, Bank Negara Malaysia, BNM, they adjust the rates as below. First, statutory reserve requirement SRR will be adjusted to 4% in September 1998. Second, interest rate for interbank fell to 6.4% in February 1999. Next is the base lending rate will decline from 11.96% in March 1998 to 8.05% in March 1999. Based on the graph, so the base lending rate indicates the positive growth from 1996 until the March 1998. The base lending rate decreased from the 1998 until the end of the year 2000. So the monetary policy implemented by BNM to reduce the cost of the borrowing. So the motives of BNM, they encourage the individuals and firms to make the loans for the investment purpose. At the same time, the BNM sets the loan growth target, which is 8%, to boost the economic growth at least 1%. The BNM failed to achieve the target. This is because the depressed demand of the credit. If BNM the forces bank to achieve the target, so the loan they extend to doubtful credit standings with companies and the project. That it will bring the negative impact for the asset quality for banks. So now I will pass to the next presenter. Thank you.
A very good day, Doctor. My name is Tan Wei Ming, metric number 270969. After a comprehensive discussion from my groupmates, now I have come to the conclusions. Malaysia, a developing nation, suffered a substantial effect from the financial crisis of 1997. Asian financial crisis has caused the value of the Malaysian ringgit drop sharply for the first time in a while. The Kuala Lumpur Stock Exchange Composite Index declined, wiping off over $200 billion worth of share. Not only that, we are also facing a high unemployment and rising inflation that worsen our economy. Malaysia's economy has formally entered a recession phase when we have a negative growth of the GDP. So as a result of the financial crisis, we have to come to understand the critical and the importance of having a true medium and long-term development strategy for our economy, and also initiatives that need to be implemented during the crisis. In order to well prepare for the next financial crisis, our group has proposed several suggestions or initiatives to strengthen our economy. Firstly, the government should focus on the structural reform for the economy and diversification to improve the competitiveness of the economy. The key issue that often accelerate during a negative economy shock or external economy shock are the high unemployment rate and low wages. Increased labor market flexibility and tougher insolvency policy are the two structural improvements that could hasten the resources reallocation and boost the productivity. Besides, instead of becoming over-reliant on the export to the US and European markets, Malaysia must develop a vibrant, interconnected economy by domestic and regional market. Investment in the economy should be spread throughout several industries rather than relying solely on a few. Government should also provide funding for the construction of buildings and infrastructure for the emerging businesses that have potential to expand, such as artificial intelligence (AI), data fabric technology, cyber security mesh, and decision intelligence. Not only that, enterprise should be offered tax incentive schemes in attempt to attract the Fortune Global 500 or high-tech companies to invest in Malaysia, and this will create more jobs to our local citizens. So for the second suggestions, maintaining a strong and adequate national reserve and monitoring short-term foreign obligation is also important to avoid the effect of exchange rate volatility during a period of market where is uncertainty. The Malaysian ringgit may weaken, which could result in a higher repayment amount that Malaysian government must make on the short-term and long-term basis for its foreign currency liabilities. The financial market might be concerned about the risk that the government might be unable to cover its short-term foreign currency obligations if the national reserve is at a low level. So it is important to have enough reserve to support this short-term foreign currency liability to ensure that despite of inflow and outflow of the currency do not have a significant negative spillover into the actual economy. The government should purchase the inflow of short-term foreign currency so that the reserve will rise in a proportion to the inflow and will be available to utilize in the event of capital flow reversal. With this approach, reserves will grow in a step when the increase in the short-term foreign currency contingent liability brought on by the inflow, and the government will be sufficient to cover its liability. Thirdly, amid the financial crisis, the government authorities should adopt capital control. Short-term financial stability can be ensured by managing capital inflows and outflows. The government may levy a speculative tax on the short-selling activities. Additionally, the rules of preventing foreigners from selling a huge amount of their share in a company that is listed on the local stock exchange in a short period of time. This will prevent the spillover effect of the volatility of the financial market from the capital outflow and discourage the foreigner speculative short-term trade in local share. For the local residents, impose a regulation limiting the currency exchange for the local to only a certain uses, such as traveler and paying a small amount of import goods and services in order to control the capital outflow. Next, a credible administrative governance strategy should adopt by the government, and it should be ready for the uncertainty to occur. There should be a good and a true preparation done from top to bottom. Socially oriented policies are essential to ensure life security among people, particularly during the inflationary period. The cost on the people will be lessened through a price regulation or subsidies for some basic consumer product, commodities, and gasolines. So that's all for our group presentations. Thank you so much.